Good morning from Florida. We just spent the last week here by Orlando doing a bunch of family stuff with my sisters, my parents, and my nieces and nephews. So there's been 17 of us having fun here in the sun. We get to go back to the cold tonight. We fly in about midnight, so we are enjoying our last day here in the sun, but also didn't want to forget about you guys and Finance Fridays. So my nieces and daughter are going to help me explain to you or help you understand some terminology, some basic terminology in accounting. So some of those things might not be so scary. So terminology is super important. Using the right words in the right setting make you look intelligent, as well as just give you the tools you need so that you'll reference the right thing when you're asking for information from your finance team. So the first term that we're going to cover is and your balance sheet is your financial position at a point in time. That could be at, let's say, December 31st, or if you have a different fiscal year end, it could be any period of that. Or you can do balance sheets every month or at quarter end, but it's your financial position at a point in time. The first aspect of a balance sheet is an asset is the things you own. So you might have cash in the bank, you might have accounts receivable, inventory, and other business assets. Lily, what does your word say? Liabilities. So liabilities is what you owe. So you probably owe some people money. That could be the utility company for your rented space, or it could be supplies if you are buying and selling goods. What's the next word, Lily? Equity. So your equity is your assets minus your liabilities. And that really is about also referred to as your net worth. But at the end of the day, we want that number to be positive. We want to own more than what we owe. Now we're going to move over to another statement. What is that one, Bethany?
Profit, loss.
Yeah, so your profit and loss statement can also be called an income statement. And it is the financial performance over a period of time. So it could be a quarterly, it could be monthly, or it could be all year. What's the next thing we need to know about a profit and loss statement? Revenue.
Revenue equals sales.
Yes, revenue and sales are the same thing. So knowing that those terms can be used interchangeably is key to speaking the right language. And the revenue or your sales is the amount of money you get in exchange for your good or service. All right, Addie, what's the next part of a profit and loss statement?
Cost of goods sold.
Yes, your cost of goods sold. So this can be referred to as your COGS. Some direct costs are in your cost of goods sold, and some indirect costs are in your cost of goods sold. So these are all the costs that go into the product or the service that you're selling. So it could be labor, it could be materials, it could be payments to subcontractors or other vendors that are helping you accomplish what it is you do, whether it's a good or service. What's the next part of the profit and loss statement? Overhead. So this is the costs that aren't going directly into your product or service. And a couple weeks ago, I talked about this with the sweet spot on the plateau. And your overhead is those things like manager wages, rent, utilities, all of those things. So once you have calculated your revenue minus your revenue minus your cost of goods sold and your overhead, then you have your profit, or in some cases, a loss, which is also called your net income or loss. And there's also terms like EBITDA, or net earnings that also mean the same thing. So in accounting, we have a whole bunch of terms, and often there's multiple things that we call the same thing. All right, one of the least looked at financial statements is one of the most important. And why it's not necessarily looked at, say, if you're a business looking for lending and the bank doesn't ask for it, is because they can use your balance sheet and your income statement to calculate what is your
Cash flow statement.
Yeah, and your cash flow statement is super important because cash is king. in business and everything. So if you don't have cash, it makes it really hard to do your operations. So what's the next one, Brooke?
Components of cash flow.
All right, what are they?
Operations, investing, and financing.
Yes. So thinking about your cash flow statement and these three components, operations, we really want that number to be positive, because if it's not positive, that means your operations is not cash flowing the business, which is important. But there are going to be years where your operations might not cash flow the business. Say that you changed the frequency in which you pay vendors and increase that for a certain reason, or you're collecting slower, that could also affect, or you made investments in inventory and those type of things. So the investing components, that's when you buy, let's say, property, plant, and equipment, and that will be part of your investing activities, so that can sometimes be negative. And then your financing activities would be, you're yawning on Facebook Live, Ricky. Is this boring? That actually is how most people view finance stuff, is boring and yawning. So you are right on cue there. And then your financing activities would be if you financed some of your operations. So if you have a negative operating cash flow, it's got to be supplemented by either investing or financing activities. So cash flow statement, super important. If you run your P&L, let me switch up over here. If you run your P&L on a cash basis, then that's pretty darn close to a cash flow statement. But if you run it on an accrual basis and follow GAAP, there's going to be things in there that are non-cash, such as depreciation, amortization, and those things that you account for, prepaids, other things that aren't necessarily part of your cash flow. So cash in the bank is super important. Cash flow statement is super important. So that was just the really basic terms, and we'll put out a term sheet too so that you have that information so you can speak this talk of the accounting world, and then when you're going to banks and when you are approached about how your business is doing, you know the lingo and what those things actually mean. So we'll post the terminology, and thank you to my wonderful nieces and daughter for being on Facebook Live today. You guys have a great weekend, and we'll see you soon.